Naveen Trivedi is joining us now, Senior VP Research, Consumer FMCG, Institutional Equities, of course, at Motilal Oswal. Naveen, afternoon. Thank you so much for your time. Naveen has come out with a very interesting note on one part of the consumption basket, which is jewelry. Up till now, there was only just one company with the lion's share out there. But over the years, there are other companies also which are grabbing market share and, of course, expanding the market in the process. Kalyan came up, Senco came up, a few others as well. Naveen, afternoon. Thank you so much for your time. This category is growing. What are the tailwinds which you see, and what are the prospects of this sector in the medium to long term, in your view?
Sure, Ajay, sure. I hope I'm audible also. So Ajay, with respect to the category size, if you look at this is a large market with the revenue size of around 6,40,000 sort of thing. If you look at the mix between the organized or you say formalized market, that stands to around 36 to 38% sort of a band. If you look at in FY19, this number was more around 20 sort of level, and if you go back to 2007, it was in single digit sort of a number. So thereby, if you look at this, there has been a consistent shift towards the formalized sort of a market, and there is a reason also. If you look at the kind of consumer experience which is there at the store, the kind of SKUs, assortment, and if you look at the kind of studded mix which is there with respect to the top brands which they are offering to the consumers, along with the trust which is there in the channel side, that has built up, and thereby the entire store expansion story has played out massively over the last 7-8 years. Certainly, it become more stronger post-COVID sort of a phase. But this sort of a trend, we expect that will continue. We don't see there is been a deceleration in the trend. Although demand side, gold inflation may slightly postpone to some extent, but the underlying thesis which is happening around more store growth led, where formalized market will keep gaining share from the unorganized side sort of a thing. That thesis, we don't see any change even in the medium term sort of thing, and thereby the players like Titan, Kalyan, Senco, and all, they can keep expanding beyond the core market. So we have seen some success stories so far where they have done well in the core market, and then we also have seen last 3-4 year, 5 year, the success rate has also increased in a newer market side also. So consumers accepting these brands even in a market where they are new, because now the kind of design, the kind of product differentiator which they are finding it in newer brands, the acceptance level are very high. So that's why I would say this category tailwinds are still driving the top players to keep expanding stores.
Naveen, what are your top picks out here? And also talk to us about how the earnings prospect for some of these companies are looking next 2 to 3 years.
Sure. So Ajay, if you look at even in our report, we had highlighted about very high store-led growth in our numbers. And depending on also, if you look at some of the companies have also experienced the franchising model is a successful model, and which really helped them in terms of expanding into in a faster phase, as well as if you look at the for the deeper penetration sort of a model. So both the business model through your own stores as well as your franchise stores have been successful so far. In our understanding, this sort of a mix, this sort of a play will continue. Although, like in the case of Kalyan, which is also going very aggressively for the franchisee part, where they also have seen success in the last 1 year sort of a thing. This will create a completely different business model, where asset-light business model, where the balance sheet will become lighter, and then they will, on top of that, the requirement from the cash flows point of view will also become healthier. So in nutshell, the revenue will also grow anywhere around 28-30%. On top of that, earnings sort of a thing, we expect more around 40% sort of a CAGR for Kalyan. Similarly for Titan and Senco also, a very strong led expansion led growth we are building up. Even for Senco also, where they are moving also beyond the east region, where they have very strong foothold.
Can I ask you what happens to the the biggest company in this space, and also new companies coming in? Grasim is entering. So what do they do to competitive intensity? And also, Is there durability of earnings growth there in this space, or select companies will outgrow others on earnings?
Sure, sure. Ajay, I agree with the point that the competitive intensity is rising, and that is the case for even if you look at one of the most the retail distribution side. If you look at most players, you will see have been expanding. So we have seen a similar supply in the case of QSR also. We have seen similar sort of supply in the other retail giants also. In the case of jewelry, where we feel that the product substitution risk is less and there is a clear-cut differentiation from the branded side, and thereby we believe that the moat will still keep in the top player side. So formalization will continue, but the large part of the benefit we expect that will be more towards the top player side, where there is a funds are there, where the inventory managements are much better, where the franchisees can still see a more attraction with respect to the brand, and thereby you will find this sort of a model where you're expanding the store, where your incremental capital requirement will be less. Very few companies can deliver that sort of a business model, and thereby I would say the capital efficiency will be more closer to the top players. In the case of Titan, since you're asking about margin side, so they were already at a significantly higher than to the industry level margin. And thereby, I would say they've now come back to more like their FY19 pre-COVID level sort of a margin profile. I would expect that maybe some ups and down can happen in the near term because of the gold inflation-led impact on the margin side, as well as we are seeing competitive intensity is increasing. But we have seen historically also Titan has really come out well, and they have really delivered well on both on the growth side and the capital efficiency side. So we expect that maybe near term you may find some jitteries, but on a longer term where execution is on their side, they can come back very hard.
All right. Thanks very much, Anish, joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.